Welcome to my new channel. In today's episode, I've brought you a conversation from the past which remains extremely insightful even today. My guest at the time was Karoly or Charles, depending on how you know him, and it was with him that I sat behind the microphone back in 2024. Charles has continued to dominate the markets ever since, and although the world has changed a lot, I think his strategy is timeless. He doesn't jump in and out every minute, nor is he a fan of the lower time frames or the smaller intervals. He trusts in the higher time frames, even though he often manages these positions over several days or even weeks. Join me and take a peek into the strategy of a true heavyweight. By the way, I hope you'll enjoy what you hear, but I'm looking forward to your comments on who you think I should do the next podcast with. Hello.
Me podcast, and this time our guest is Karoly Kunos, who is the instructor of the Forex Trader Master Course and the owner of forexsd.com. Welcome, Karoly.
Hello everyone, thank you very much for inviting me on this occasion, and thank you as well for immediately mentioning these important details about me.
Well, yes. So we always start with this: who you are, what you do, and one of the main reasons, by the way, why I think others also recommended you for us to have a chat on the podcast is nothing other than the fact that in some ways we are a bit similar. You and I both accept that there isn't just one way to trade on the market, on the stock exchange. So there are several methods to make money here. We've seen this from the big players, we've seen it from the smaller ones too. And what I found really appealing, even compared to others, is that you've never had that hostility in you, which unfortunately many people do have. This ego battle that only my method is good, no one else's is any good. How do you experience this? What do you think about it? What do you see on the Hungarian market? And one more question here. What do you think? Why are the other so called Hungarian educators or mentors like this?
I don't have such extensive experience that how much other mentors let their egos take over, although of course I have had a few such encounters. I think that anyone who has managed to reach a level in this profession where they can consistently make money must have gone through a kind of personal development, a growth in personality, to realize that in fact we are not competing with others, but entirely with ourselves. And there's no point in concerning ourselves with others, with how successful they are or whether they're better than us. If they are better, then I congratulate them, and that's that. But really, the real battle is with ourselves, to overcome ourselves, to change, to become better. And it's completely pointless to focus on others. In my opinion, anyone who does this perhaps hasn't quite managed to cross that threshold of personal development yet.
The individual steps of this particular staircase have been meticulously crafted with a very specific design in mind, featuring a solid structure that ensures both durability and a distinct aesthetic appeal for anyone who might be walking upon them. That you put all your energy into it. Because if you really take trading seriously, then firstly, as you said, and I completely agree, you go through a sort of psychological development and you actually realize that you should be focusing your energy elsewhere. The other thing is, by the end of the day, I don't think you should have any energy left for this if you really take this whole trading thing seriously.
I feel the same and think that way too. On a daily basis or from time to time on various portals where I appear on social platforms with different little videos or opinions, people do have a bit of a go at me now and then. And
But I've seen your responses, and that's exactly why I found you likable. Because even those who try it on, since people have so much free time, they do try it, you always gave a really simple answer, dead simple. One of the last things that came to mind brought a completely different strategy into the picture. You had an insight, if I remember correctly, it might have been NZD/USD, although I didn't want to jump so far ahead at the start. But even then, it was clear that, well, yes, there are several ways to win on the stock market. That was more or less your reaction. Bravo, top marks for that response.
Yes, thank you very much. I think there is such a wide range of ways to make money that we'll have to narrow it down to the opportunities we know about or those we've gained experience in, because it really is a wonderful profession in any time frame with any concept. In fact, an entry can be successful in both long and short directions. It just depends on what time frame we're considering.
That's right. And what we should never forget is that we make our money at the exit, not at the entry. And it depends on the strategy where that is. Now, that's also why I said I don't want to rush ahead so much, because there's an important thing here. The usual, please introduce yourself. When did you first get to know the stock market? How did it start for you? How did you get acquainted with it? Any initial experiences or setbacks? How did this whole thing begin for you and when?
That might end up being rather long if I include all sorts of experiences and setbacks as well. Still, but
Everything. Just perhaps a few words about the very beginning.
yes. Well, I first got acquainted with this profession 21 years ago. It was completely by chance. One of my friends invited me along, saying there was some sort of stock market thing going on here, and there was an open lecture. And actually, my first real experience wasn't even the lecture itself, but rather that beforehand, there were already a few people huddled together over a laptop, and they were all excitedly showing each other something. So, of course, I sidled over and had a look. There were these black and white lines on the screen. Now I know it was a chart, and they were talking about it with such enthusiasm. I looked at it and thought, this is the most boring thing in the world, just a graph. But what intrigued me was why they were so excited about it. Then there was this introductory lecture, and then even then, I still hadn't got to the point where I thought, right, I'm going to get into this. The next step was that this same friend of mine said, well, there's this financial board game called Cash Flow 101, and you can sort of try out what it's like.
Not the Robert Kiyosaki one. What?
But yes, the 101, yes.
Yes or no it?
So I went along to one of these games, full of confidence. I was an entrepreneur. I'd already been in business for over 10 years, so I thought, now, when it comes to handling money, they won't be able to tell me anything new. But sure enough, I was stuck in the rat race, I couldn't get onto the fast track, and to be honest, I felt completely humiliated because those who'd already played a few times and had learnt the basic principles, they were getting onto the fast track in no time at all. What, half an hour, already dealing with big money. Meanwhile, I was just going round in circles in the maze of everyday life, and that's how it ended for me. I really felt quite deflated, especially since my friend who'd brought me along had completely outpaced me in the game in no time at all. He told me there was this course, he introduced it to me gradually, where you could get to know the stock market. Well, a week later, there I was, sitting at this. Then years ago, I started learning this trade. Those were my first steps. That's where I received my first instructions about it. But then I had to realize that this initial training wasn't enough for me to be successful. And since I was still, years ago, there weren't really any traders, or at least none that were accessible to me, who were successful, who had a track record behind them. There weren't any available. So I tried on my own, off my own bat, to build on the foundations I'd received in that first course. And we're talking about years here, during which I experimented, made observations, tried to develop all sorts of my own concepts. And I kept trying along these lines. And as they say, I donated quite a lot to the market during this time. I traded with real money and, well, I lost one after another. So I lost a lot of money. And looking back now, I think that if there'd been a really good course available, I would have come out much better off if I'd just paid for someone else's experience. But I didn't have that option. And then the years went by. I did a huge amount of analysis. I saw a lot. I spent several hours a day on it because I was fascinated. And then, slowly but surely, successes started to come. And then, after a few years, it became possible to access the courses of some foreign traders as well. There were already people dealing with similar things, and in certain specialized areas, they were able to share transferable knowledge. So I attended their courses too, and I tried to learn from anyone I could. And that's how I pieced together my own concept. That's probably the short version of the story.
Yes, these are basically the shortened versions of these 21 years and their beginnings, but I'm sure we could talk about it until morning. We started out with similar experiences, just like how I began back then, years ago. So, about a good year after you. And I experienced the same thing even then. So, even though you had already been in it for years, I still experienced the same thing, that there really wasn't this rapid flow of information on the internet yet, like there is nowadays. YouTube wasn't that widespread, and people didn't really have the inclination to upload any kind of material or interesting content there. As for Facebook, let's not even mention it. I think it was still the previous version, IIR, along with the other social media platforms. And those whose courses or personal seminars you attended, well, for the most part, if I remember correctly, these were mainly brokers with Hungarian representation who would pass on a bit of information here and there, drip feeding your bits from various places. But in truth, their ultimate goal was simply to get you to sign a contract with them and bring your money to them, which you would then lose. Because let's be honest, they didn't actually provide you with the kind of information that would allow you to be consistently successful. And as a matter of fact, they're still doing the same thing to this day. So now, instead of at seminars, they just upload these strategies to their own websites because they know it won't make any real difference for them anyway. But perhaps they drip feed just enough to convince a new client that they can do it too. I don't know if you ever came across this back in the day, that the whole thing was basically just an advert, and at the end of the seminar, all they wanted was for you to sign the contract with them. Of course, that's exactly how it was. There wasn't really anything else there. Maybe some cheese scones and coffee as well.
Yes, yes. Yes, at these sorts of events, the biggest and best experience really was the fresh cheese scones. And actually, yes, I've come across plenty of these. And when I started to feel that I could see through it all, I also realized what interest the brokerage firm had in herding in clients, those who know nothing, and convincing them that after a little bit of training, they'll become successful. I can see through all this now, and there were times when I really struggled with my conscience. For example, right in my hometown where I was born, I went along to one of these brokerage firm presentations out of curiosity. By then, I'd been in this business for about 10 years, and I genuinely felt guilty, wondering whether I should stand up and tell everyone, guys, get out of here, or just sit there and nibble on the scones and then just go home afterwards. Well, I thought since they'd already sorted out the scones, I wouldn't say anything negative, although I couldn't resist asking one or two awkward questions, but I'm not sure everyone picked up on the answers.
With these, I always thought in good faith that surely they were saving the important part for the end, or that they'd leave what would really matter on the day until last. 98% of the time, I felt exactly the same as you.
Yes, yes. So now we know what the intention is behind it. So these adverts are almost automatically deleted before our eyes now, and we take no notice of them. Yes,
Just scroll past them.
exactly.
Actually, first of all, I'd like to congratulate you for still being here after all these years, because a lot of people drop out within the first month or two, those who thought they'd suddenly become millionaires from this. Then, after the first 2 years, when they've tried and already bought countless courses from people advertising themselves with Lamborghinis, and then maybe the fifth year is still tough, when you realize you need to develop your psychology to match what you've learned so far, and that you can actually make sense of those things. And it wasn't all bad picking things up from here and there. And after 21 years, you're still here. Along the way, you wrote a book. Could you talk a bit about what motivated you to get into writing a book and also into teaching at the same time?
Yes, my feeling was when I looked at the available books that they were overly theoretical. So, in reality, if you read them, you know more in theory, but somehow you don't actually make any progress. And I had the feeling, or rather the belief in myself, that I could write something that was a bit more like mentoring. And when I started working on my book, I said to myself that I wanted to write a really good book, one that would genuinely raise the reader's level of knowledge by the end, or at least practically improve the knowledge of whoever reads it. And I committed to the concept that I would write as if someone was sitting right next to me, and I would explain every single part of what, say, appears on a chart separately and in detail. And then I would also talk about the psychology, the theory, the practice, my own experiences, what the candlestick patterns show, the whole concept. And I would demonstrate, for example, if I were to start trading with this, then let's say I would show how this could be managed in 3 or 4 different ways. And I tried to give the book a conversational, mentoring vibe. And I believe I managed to achieve that.
What motivated you to write the book? Apart from the fact that up until then there were only theoretical things, let's admit it, diving into a book like this can take up an enormous amount of time.
I can confirm that. Perhaps there was a bit of pride in it as well, that I wanted to show myself to the public in this way. For quite a long time, I hadn't really stepped into the limelight. I hadn't really shown where I was at in this profession. Maybe this was the point where I thought, perhaps I'll show myself in this as well. Or little nuggets of knowledge or some kind of unity. Maybe pride was the initial motivation, but then the more time I spent with it, the more I felt that I was giving something with this. And the good feeling about it changed along the way. And I felt that whoever reads this will feel some kind of support. And the whole thing turned into this nice, as if I were fulfilling some sort of mission with this. That was the mode I found myself in. And when I remember putting the first copy down on the table, I just sat there in front of it. And for about 15 minutes, I just stared at the book, and all sorts of thoughts were swirling around in my head. Like,
The feelings.
that's right. And it really did take 2 years to write.
It took 2 years to write. How many pages is it?
It's about 250 A4 pages.
About 250. Which came first? Teaching or writing the book?
Teaching came first.
If we look at your years, when did you start that? How many years had you already spent in the stock market?
Oh, that's a very good question. And I've thought back on these as well. Well, it was about
And then from when can you actually say that you started? Because I suppose it was similar for you as well, that as soon as your acquaintances found out you were involved in this, they started flocking to you, pouring in with their. And now I'm not talking about the online space, nor about unknown acquaintances, but rather those close to you, asking how this works, what it's like, whether you can really make money from it, saying they've heard it's like a casino. Didn't these things come up in your life as well?
all sorts of opinions came my way, yes. And indeed the questions as well, although it was more the fear that showed itself in those. So when I said that I was involved in trading on the stock market, that's when the reactions started coming in. Preconceptions, as you said as well, gambling, you'll lose your money while you're doing it, and so on. That's roughly what the education's like. Years, perhaps, years. I started teaching relatively soon, and in hindsight, perhaps with that level of knowledge, I wouldn't start now. But when I look back, the most I actually learnt the most when I started teaching, because up until then I was already able to make money for myself. But if I wanted to pass on the knowledge to someone else, I had to know certain areas much more thoroughly, and I was forced to delve into topics that otherwise perhaps didn't interest me as much, or I was satisfied with a certain level of understanding. But if you're passing it on to someone else, you have to answer their questions as well. So I definitely had to ask myself more questions than the person sitting in the classroom. And from that point on, I actually developed much more quickly than before, ever since I started teaching.
And
Well, that's how it's been ever since.
going. It's a form of self-education that an awful lot of people simply don't understand, because the basic question always comes up: if you're already doing so well, then why do you need? And what they can't see from the other side is exactly this. And I'm really glad you've highlighted it. These particular sub areas that you get to know or gain insight into. Because essentially, by explaining it to them, by trying to outline for them what the underlying content is for you, what the underlying knowledge is for you, how you approach it, what you look at in that moment, all of these things, or write them down. And in doing so, you're not only revising, but also seeing the same chart or the same event you have to talk about from new dimensions, which means you're developing yourself. So, in fact, from their side, they gain and you gain at the same time because you're both progressing in some way. Obviously, they'll develop at a faster pace, while yours is more like a statue that you keep tweaking a little, shaping a bit, perfecting a bit. And on the other hand, you realize that if you can't get your point across to someone who isn't in your shoes and doesn't have your knowledge, but comes from a completely different background, then it means you don't actually know what you're supposedly teaching. So, on the one hand, you have to learn this as well to be able to speak their language. And not to mention that every person is different. Everyone is their own individual. They come from different backgrounds and they each have their own way of hesitating and forming opinions about what you do. And yet you still have to adapt to them. So, in a way, you never pass on that knowledge to two people in exactly the same way. Even if you have, say, some teaching material or a book that follows a set structure, which of course is fixed, but when they talk to you, the questions they ask might well be different from the ones you asked yourself before you stepped into the role.
Yes?
So, this is a very good thing. And it's exactly this aspect that I always like to highlight, apart from what I'll mention in a moment, that with you developing on the other side, I'm developing too, since I also have to go through the material, it'll strengthen me as well. I also have to go back over the details, which, let's say, years ago I used to draw on the chart and mark things in, but now I just sit down and my eyes spot it in half a second. Now, this might be a good thing since everything is sped up, but it's exactly the attention to detail that gets lost in the process. And of course, when you lose that attention to detail, you slip into a superficial state, and then it's possible that tiny little details get left out when it would have been important to mention them. And these are exactly the moments they end up asking us about. That's how you saw it as well, in a way, didn't you?
Yes, yes. You explained some really important things in great detail, and you summed it up very nicely. So it's as if I'd said it myself, really, both in form and, in fact, truly so. In fact, there were times when a participant on the very first or second day of the course made an observation that left me astonished, thinking, goodness me, I hadn't realized something in 10 years. And they shed light on a new perspective. And I thought, wow, how wonderful it is that we've met each other.
Perhaps this is one of the beauties of it, yes, that you don't even think about these things, and then someone guides you to them. A tiny little detail that was there all along. Around you, it was there in your life, you use it every day, and yet you didn't see it, but they did.
Yes. And on the other hand, as you mentioned here, when we look at it, we see every line and every location, and we notice that a chart isn't even marked up because our brains have already got used to what they're supposed to see there. And I've also experienced this, as in my Facebook group, you regularly share these little analyses. And sometimes on that particular day, I see this opportunity. So I draw two lines, and then I naturally assume that everyone sees it too. And then the question comes up, short or long? And then, oh my goodness, this is too little what I've drawn on. It's not enough. So I try to draw these lines or add a bit more so that it's clearer for others as well. Yes, because we forget sometimes that they don't see what I'm thinking, even though it's the same line.
That's right, that's right, that's right. For us, that one line might already be enough, and we can already see the whole story behind it. But what I'm mainly talking about here is relevance. So you'll only put that line in the current location because you've already generated the background story of the pub in your head, and you're just drawing the line for the final stick. But of course, this raises huge question marks for someone who doesn't have as much experience yet. By the way, another thing I usually mention at times like this, when people ask about the reason for teaching, why I do it, is that for many, many years, call it an office, call it a separate room, this is, in a way, a lonely profession. You're on your own in it, there's no one else, just you and your position, I could say, or you and the humans are social beings. And after a while, well, for a time, the silence is nice. And for a while, it's good that no one tells you what to do. And no one says, since you mentioned you started out in business, and if you put 110 to 120% into your business, so you give the client the most perfect service, even then, 2 weeks later, they can come back saying they're not satisfied, or it's not working, or it's not right. Now, for me, perhaps this was one of the most beautiful things about trading on the stock market. Here, you alone are responsible for your actions, and if you get stopped out, that's your fault. You can't blame anyone else, you can't go to anyone else, and if it hits take profit and you win, then that's yours alone. No one can take back what you've already closed. No one's going to come back asking for a guarantee, no one's going to come back to complain, and no one will leave a bad review about you on your Google account. So, in a way, this is a one-on-one game. I mean, one wins, the other loses. But nowhere do you have the chance to talk your way out of a loss.
Yes, so you're talking about taking full responsibility here, which is something you simply have to learn and get used to here. That we take responsibility for every single step we take, and no one else is responsible. Not the market, not the education system, not Warren Buffett for doing something at a particular time.
He's not the broker either, which is what we hear most often, that the price moved because of the broker. All right, there are cases like that, rare, but they do happen. And by the way, I'm not just talking about the bad things here, but really about the take profit as well. You mentioned being an entrepreneur back in the day, but I'm sure you had experiences where you gave 110%, did everything right for the client, and yet for some reason it still came back to you.
Yes, now I'm talking about my business outside of the stock market.
Yes, because when you mentioned that, even when you went to your very first course, you were already an entrepreneur. From an entrepreneurial perspective, you thought that this money, or that certain hamster wheel part, that couldn't possibly be a problem for you. And that's why I assumed you have experience in this area.
Yes, I did have a commercial business, and I really did it with great enthusiasm for a very long time, putting my heart and soul into it. And yes, despite that, there were failures, quite a few actually. Mostly it was a success, but yes, there were times when I put everything into it, trying to build good relationships so that a business relationship would work well in the long term, and yet something still went wrong. Yes, these things do happen.
And then came the excuses. And these are exactly the kind of excuses you can just forget about here on the stock exchange. So neither the good nor the bad side matters. You see, when there's a TP, that's the better outcome. But when there's an S, as you said, the full responsibility lies with the trader or falls on the trader's shoulders. Of course, I'll just add in brackets here to preempt. Of course, I should mention in parentheses that this was preceded by a thorough bit of market research. So you're not with some dodgy broker, nor are you using internet pinched from the cheapest last resort Wi Fi cafe, so your connection won't drop out either. In other words, you've done everything to make sure things are spot on, so there's no one you can blame. Going back to recent times, the Forex market, or any market for that matter, is such the past decade has changed enormously. How do you see the biggest changes in terms of technological development, market access, and regulation? And what impact have these had on your methods? Let's say after your first 3 or 4 years, and then, for example, last week. What were the changes for you between those 2 points?
Yes, so the pace has changed tremendously. That's exactly it. Because of the rapid flow here, everything happens much faster on today's market. In fact, the market reacts to any news almost instantly. And for example, on the currency market, the change triggered by a particular piece of news can happen within seconds or minutes. So in reality, you barely have any time to latch on to some fresh news. I find that I can only really be successful, at least on the currency market, by thinking in longer time frames. Because sitting there waiting for the news to come out and then trying to trade on the result is becoming less and less feasible as things happen so quickly. In the past, I mostly traded on the stock market and the options market. Those were really comfortable things, and I would absolutely love it if the market were like it was 15 years ago, say in the early 2000s. Back then, it was incredible. I would make money so easily. I look back and see a constantly rising market. Whatever you bought, you made a profit from it. And yet, I still managed to lose money, of course, by overthinking things with all sorts of complicated techniques. The point is, never. It was much slower. The market is much faster now. I think that's the key difference.
That's the one key thing you could mention, that it's not just the reaction to the news, but in general, the chart itself has sped up. And what I would add to this, if we're looking at the reasons, is that it's not just the faster flow of information, but also the increased number of participants. You see, the more participants there are, the greater the volatility, and the more ideas we'll see reflected in the market. And perhaps that's why we're no longer just talking about a motorway, but specifically a German autobahn. So it's speeding along at that level. And I've noticed this myself, that back in the day, many years ago, when I was dealing with what I now consider simpler strategies, I still had time, even after a formation had developed, to think about it. Maybe yes or no, should I go with it or not? But now I really see what you're saying. If you're not there and don't press the button immediately, you could end up with a serious number of pips against you because the market reacts at a brutal speed when it wants to move in the right direction. Or let's take the best case scenario, that I thought it through correctly and it wants to move in the direction that's good for me. Of course, there's no such thing as a good or bad direction since there are participants on both sides. But I completely agree with you. So you're saying that speed itself has definitely been turbocharged. It's there, it's appeared. And for those who might be focusing on newer strategies and technologies, what would you personally say? How can the old and new methods be combined? How do you adapt these in your teaching to the current market conditions? Has your teaching changed at all over, say, the past 10 to 15 years?
To be perfectly honest, I would say that fundamentally my teaching takes a much more traditional and somewhat conservative methodology. and I do not tend to focus on or address current trends in it, such as the recent and dramatic surge in the popularity of binary options, for example. And there are all sorts of different things like that. I tend to focus more on the traditional aspects, specifically technical analysis. And as for how each student will use that, I ultimately leave it up to them. But I do provide them with guidance on what the solid fundamentals are, things like the stock market, which is very likely to still exist in 20 years' time. As for these little resets, there are new surges of interest. I don't really want to go into those because it's possible that in 5 years' time they'll be completely irrelevant and the product that's currently being hyped might not even exist anymore. That's why I stick to this classic approach. If someone puts a chart in front of me, I can form an opinion from it. And it doesn't matter whether it's a stock or the chart of some other instrument, as long as I can properly determine from A to B whether the price is likely to move or how long it might take to achieve that, even if I don't actually know what instrument is behind it. So I teach these fundamentals in a more conservative way, and I don't really tend to go off in these newer directions.
Right, I understand. So, from your life, the newer types of strategies that have appeared as well, I don't just mean the technical methods, like you mentioned, for example, trading binary methods, but let's say something like the smart money concept. That has been completely absent from your life.
It seems to me that,
You see, this SMC is very fashionable these days. That's why I'm asking.
yes, it's very. I think that actually, when I am teaching technical analysis or when we are having a conversation about it, these specific levels or where, the liquidity is sitting or where the smart money appears, basically, even without knowing for certain whether it is due to the large presence of institutional investors, we can still interpret it quite effectively. So, looking at it from that perspective, as for the specific reasons why those movements happen on a chart, particularly the ones that do happen, I do not necessarily believe that it is important to look for the underlying reasons behind them, although I can certainly agree with people who specifically focus on this. But you see, the markets and the price movements themselves are the collective result of the ongoing activity of the entirety of the global market. Clearly demonstrates this point, of which a significant part is the strategic movement of smart money. So I don't think I want to go specifically in that particular direction to treat it as an entirely separate unit, how smart money shapes the blocks, the liquidity, or the trend changes, because every single piece of relevant information is already present there on the chart. And analyzing these specific elements, we learn. And I believe that we don't necessarily need to know in every case what creates it, just to accept the fact that this is present in the market.
And then when it starts moving, you just get on the train.
That's right. That's right. And at the moment, I'm not particularly interested in what causes this movement, this liquidity. I just acknowledge that it exists.
Ah, I see. Because the instructor refers back to the past, saying that the methods which worked back then could still be effective now, even if those were used years ago. What was there back then should still work now, at least in most cases. So basically, you approach it with the same attitude, because where, let's say, the elements of a newer strategy will work, in theory, the market should move in your direction as well.
Well, I see it like this. The strategy tries to make money from the situation by following market movements. So it processes what is happening and not the other way round, meaning the strategy doesn't create those movements. And in this way, we simply follow and react to what the market does.
Yes, 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 yes. Actually, that's how I thought about this part as well. What else did I want to ask? If you look back at years, your years long career, what would you do differently if you could start again now? What advice would you give to someone or to those people who are just about to start trading Forex?
Well, my mistake was, and I admit it, that I also started out thinking it would be great to become a millionaire within a year if possible.
I think we all started out like that.
And well, my advice would be to put aside whatever starting capital you have for, say, the first 2 years, put it somewhere safe, and practice with a small amount of money in the meantime. The large amount of money I lost myself in the first year or two would have come in really handy once I actually had the knowledge. Without knowledge, we burn through a huge amount of money on the market. At least I did. And how much better it would be.
To have, those who haven't, well, there aren't many. So most of us are in the same boat.
And that money would really come in handy once you actually have some, even if only a basic level of knowledge at the start, but at least some knowledge. Or if I were moving according to some sort of concept, then that money would already be useful. But the money I burned through in complete ignorance, well, that never comes back.
And not to believe, well, if I were to speak for myself, not to believe everything that's put in front of me, but to actually put in the time to backtest the chart, to really look at the situations, to keep backtesting so that it's really like that. And not just because that person who once showed me their trades on the projector over some pastries and coffee put them in front of me, that is genuinely the case. And not just that they cherry picked the trades that happened to work out and presented those as examples.
Yes.
By the way, which technology or innovation do you think has most changed the way the Forex market operates in the past 20 years? You still trade in the same way. And I'm not talking about your strategy or your analysis now, but from a technological point of view.
I'm thinking of robots because basically orders can suddenly flood the market, causing such rapid movements that, in my opinion, this has become the most significant factor influencing market movements.
And the increasing number of small robots. So it's not just the robots themselves appearing, but we still have the advantage that when it comes to things that can't be calculated by a basic mathematical algorithm, but require the human mind or eye or certain intuitions or feelings, we might still have a slight edge over them. Not to mention that when these robots enter the market in mass at certain points, then they leave certain traces. So you can see it on the chart at those times when the candle suddenly spikes dramatically, and then perhaps you can start paying attention to these moments.
Yes, and perhaps it's also the human mind's ability here that we can look further ahead and think ahead. So I believe that most robots tend to focus on smaller movements, if you can put it that way, whereas we
But
can perhaps see further ahead.
perhaps this is what saves most positions, that we don't enter for just 1 or 2 pips or 10, 20 points like a robot scalps for. Now, of course, we've narrowed it down to one category, namely scalper robots, but obviously, when they put that enormous amount of money on such a short time frame, that's what can really make a big splash on the charts. So, yes, so you would basically say that this is what has changed the most on a technological level, and it simply wasn't there back in the day.
For me, this is the essential difference.
Has your personal technology at home changed the way you trade?
Now,
Is it still the same computer, one monitor, two monitors? How do you manage these things?
I work with two monitors. The technology itself isn't particularly important. The main reason I have a large monitor in front of me, which I connect to my laptop, is so I can see the whole picture a bit better, a bit bigger, and perhaps split the screen between the different bits of information I use. My approach hasn't changed significantly, although I do notice, and sometimes I think to myself, that yes, it would be more convenient to use one or two of those little expert tools for certain things. But in reality, I try to trade in a very simple way. In fact, I'm trying to make it even simpler as I go along, which doesn't really require any special assistance, since I'm just carrying out very straightforward steps. There's no need for lots of calculations, tweaking, or taking a great deal of information into account. Rather than things getting more complicated or involving more factors in my decision making, it's actually becoming more streamlined, and there are fewer and fewer things that I use. So I have this principle that as one progresses along a path, as one knows more and more about something, one is able to do it in an increasingly simple way. All the unnecessary extras just fall away from the technique. So decision making becomes much simpler. There are fewer factors. I make decisions based on less information because I can already see the bigger picture much more clearly. And I don't try to make things complicated. I don't go into too much detail with decision making, but I'm able to filter out the important things, and I trade in just a few simple steps, so I don't really involve any major technologies.
I see. Are you currently trading on a funded or a live account?
I'm on a live account.
Is there any particular reason? Because this is also basically something that has come up in our case, these funded accounts, which didn't exist back in the day, or at least only existed among big investors or major lenders, where if you were already a truly excellent top 5 trader, they would offer you the opportunity or share a portion of the profits with you. However, since these companies have entered the retail market and are now available to anyone, they really provide a great opportunity for capital to multiply. So why not do it with them?
I'll answer one part first, that they do indeed provide the opportunity. But for beginner traders, this is just an illusion, this opportunity, as they won't be able to get to the point where they actually use the institution, that is, reach the big money, let alone get paid out. The statistics for this are, of course, very poor.
In a way, it's their business model. Because if these certain people you're talking about always reach that goal, then the other side would go bankrupt. So it's no coincidence that there's that particular percentage as well. That the percentage, of course, doesn't reach this level, and in fact, they're just glad if they can keep their account at zero. I think there's a statistic about zero as well, that 85 to 90% are only able to keep their account or the curve at zero. I'd just like to respond to this very quickly and then I'll let you continue. That these people make their living from this. And since you also come from an entrepreneurial background, name me another business model where someone tells you that 95% of walk-in customers will leave their money with you.
Few companies are lucky enough to have this, really. Yes.
Go ahead, carry on.
Yes, so it really does seem small, this, what do I know, euros, for example. FTM say that you put it in and get started with it, but actually, that's quite a lot. Euros, in my opinion, and only a very small percentage will get as far as even a payout or even just keeping the account going. That's still for them to operate in this in the long term. The reason I don't take part in this is because, well, I just feel I don't need it. So I move forward thinking within my own limits, taking steps ahead. And now it would bring another change if, say, I were to come into significantly more money, if we assume that I go through this whole process and can meet the requirements, which might be time bound, or perhaps even the daily loss limit, maybe the technique,
Yes, because they've already removed the time restriction as they realize that even without a time limit, plenty of people still lose. However, the daily loss limit is usually kept within this 5% range, and the total loss limit is left at around the 10% mark.
Yes, and it might be that my technique wouldn't fit within these limits, even if in the long run it would be profitable. But I might fall out of it here and there. And in truth, for me, it would be a burden that I have a well developed technique. And then on top of that, I would have to meet some other requirements. So it would take away this sense of calm from me as well. Also, I think that if I were to come into much larger sums of money, or if I were to manage that, then I would have to deal with the fact that there would be a psychological factor as well. Firstly, the feeling that I might handle it more loosely because I would feel that I'm not risking my own money. So there would be this psychological side to it as well.
You can make a very long list of cases where someone is suddenly used to a certain amount and then say it swells to many times that amount overnight, and they haven't had those several months or years of gradually building up your account yourself. So the psychological effects can be absolutely massive. This is where the shaky hands effect comes in as well. So, even if you trust your years long strategy or your statistics or your back tests, your hand can still tremble because you see that there's now a much, much larger amount sitting in your account, floating there. And it might be that despite having years of statistics about when you should close that trade, you'll end up closing it much earlier because the amounts floating there are completely different.
Yes, and it's just difficult to actually do it, to really stay calm and not look at the account size and just trade and focus on the experience of trading. It's much harder when there are bigger stakes involved.
Yeah, so then what would influence and bother you is this pigeonholing, this shutting yourself away within certain constraints and rules, which at the moment aren't present in your life and in your everyday trades. However, it could have a significant psychological impact, possibly even affecting you to the point where you might start doing silly things during a trade.
Yes, it's possible.
So, to sum up, these are the reasons why you wouldn't go for the fund.
I might make mistakes, but really it goes against my worldview, which is that the most important thing for me is freedom, which
This
this profession gives me. So it's not about the money or anything else. It's about freedom, free time, the freedom to make my own decisions. If I end up with restrictions, then I associate it with a bit of a bad feeling. So, this carefree sense of freedom, and by the way, taking on responsibility as well, is what it means to me. But somehow taking this experience away from me.
I completely understand you. I really do. Especially if the main motivating theme of how you live your life and do this profession is that, then I can completely agree. Because what I didn't like back in the day, and thanks to the UAE, a couple of things have now been corrected, as most of my accounts are there, and I'll get to why in a moment. One thing was that they limited the time you had to complete these accounts, which had a brutal psychological effect because that's exactly what you shouldn't be doing on the stock market. But you have to wait. I always tell everyone that we're not paid here to keep pressing the sell and buy buttons because, frankly, even a monkey could do that. We're paid to wait and be patient for the opportunities that present themselves to us and to enter at the right time with the right amount of risk. Now, thank goodness they've removed this time limit, but still, for example, they've set the rule that you can't trade a couple of minutes before or after certain news releases. That's still manageable because at most you just tweak your trading style a bit if you hadn't already done so. In any case, since I trade on slightly lower time frames, so under 15 minutes, it wasn't really a problem for me if, say, an FOMC or an NFP During the news, I enter a position. But what about when you do everything right? You enter during a completely calm and quiet period, but then it's these news events that hit your take profit. Now, that was an absolutely massive source of stress that you do everything right. And as I mentioned at the beginning, that's why I like the stock market, because if you do everything right, you're rewarded. And there aren't these drawbacks where they come back for your money. But here, you did everything right. Everything. But by bad luck or good fortune, it's the news that pushed the price enough for you to hit your take profit. And then I have to give my account back because of that. After all, their line was that if you're successful, they're successful too, since that's why they take their percentage. But as the months and years went by, it turned out around the prop firms that no one actually takes your account live. And it became clear that you're trading on a demo account the whole time, even when they write there that it's supposedly a live account. And then, of course, with the help of the flow of information, which has sped up now and isn't like it was 20 years ago, it became possible to find out that on that particular MetaTrader, when they write that it's a live account, it's basically 2 clicks from the broker's side. Regardless, you're still trading on a demo account just the same. You suddenly realize that actually the world is still just as it was before. So, in a way, this is a Ponzi scheme, but to such an extent that the new entrants, the new participants, are essentially funding those who are successful.
Yes.
And it was much the same with Ponzi schemes 100 years ago as well. So nothing has really changed in the world. It's just that the technology has become a bit fancier, the graphics have got a bit better, and things are presented a bit differently. They just present what's there in a different way.
Yes, yes. Well, that's exactly why when these new waves come along, these new hyped up things appear, I take a look at them, get a general sense of what they are and how they work, just to be aware. But usually I wait a while to see if they prove themselves. Of course, there are some that fall by the wayside very quickly. Here I'll mention binary options again. When I first heard about them, and then my students were asking me, what is this? What is this? I looked into it, and very quickly, just by working it out mathematically, I realized that it can't be profitable in the long run. From that point, I very quickly dropped it from my field of interest, and especially when it started to involve things like bring in 2 people and build
A multi level marketing network.
that's when I immediately shut down. That's where my interest ends. I don't even hear anymore.
About it. I don't know if you've ever come across it. Unfortunately, I have. When young girls are trying to sell their Forex course through an MLM system. If you haven't come across this, then you've dodged a bullet. Unfortunately, I listened to that 1 minute or 60 seconds, and that was more than enough for me.
So there are certain forms that appear. I'm listening.
As I said, there are these ways. Yes, I was just agreeing.
When there are certain forms that I see, a window pops up, I automatically move on. So I probably just ignored these. But obviously, how much experience can an 18-year-old girl have on the foreign exchange market, for example? That immediately raises questions for me.
That's again the billion, or the one in a billion who might have been born a genius, but probably. In reality, she won't be that. That's what I wanted to say.
Well, she could sell a genius.
Yes, I also wanted to ask, because I must admit I have an opinion about this, but I'll wait for your answer first. Do you do this whole stock market thing alongside another job or business, or is this your only source of income?
I have several sources of income, but they're all related to investments. So the main income, due to other effects. That's why I strive to have several different streams of cash flow. So I don't have a traditional job. I consider trading on the stock market as my job. Alongside that, I have properties, rental properties like these, and I own land as well. I also see education and my book as business ventures. So that's how it stands. Stock market, property, business. the three main pillars of investment, as it were. So I have cash flow coming in from everywhere, but I don't have a traditional job. This is my main activity. Yes, trading on the stock market. But the longer I do it, the more I see it as a long-term thing. So I'm starting to think of it more as an investment. So my aim is for it to take up as little of my life as possible. I've already had my fill of day trading from morning till night. That phase is behind me. Now, my goal is to generate money with as little time investment as possible. So to answer your main question, yes, I only deal with this topic, though I do have a couple of other investments in different directions.
If you could see my face right now, you'd see my smile is practically reaching from ear to ear. I'm really pleased with your answer. Really pleased with your answer. This is exactly the sort of answer I was expecting from you. And to be honest, the reason is that, in fact, all those people I've spoken to, not here on the podcast, but in person or perhaps online, who claimed that yes, they live solely off the stock market, it turned out every single time that the whole thing was fake. So it wasn't real. So this. I have never met a successful stock trader who didn't have multiple sources of income. Not to mention that making a living solely from this, in a market where you do everything based on statistics and probabilities, puts such psychological pressure on you that you feel you have to win, if not every day, then at least every week, or you have to come out ahead. Every month, you have to put some money on the table. That certain yellow check has to be paid at the end of the month for electricity, water, internet, and this puts such brutal pressure on your trading side that it will inevitably bounce back in the outcome of your trades. You don't wait for a possible stop situation to actually hit the stop, you quickly halve it, just so it doesn't end up being a full stop again. Even though you had a reason for it, you didn't put that stop there by accident. And the same goes for a possible take profit as well. You cut your profit short early because as soon as you have a tiny bit in your pocket, you quickly take it just in case the price turns against you in the end. And of course, the third one is break even, which I'm particularly fond of using. You move your position to break even far too quickly as well, just in case you end up with a loss again because you've had such bad experiences with this before. And at the end of the month, you absolutely have to pay your bills, and that income comes from this, if there's any income at all. So I'm really, really pleased with your answer. By the way, I should add, I live my life with this kind of mindset as well. I also have several sources of income, and I always emphasize that the stock market is one of them. It's not necessarily the biggest every month, but I strive to make it the largest. And as for a classic 9 to 5 job, the way your average Joe would put it in quotation marks, setting off into the traffic at 8 in the morning, going into the office and heading home into the traffic at 5 in the evening, I don't have that either. However, since I don't really see it as a job, but rather as a labor of love, because otherwise I don't think you could do it for so many years unless you truly love it.
Yes.
That's why I try, with all my heart and soul, to sit here and do this almost every single day. I'm not saying that I either sit in front of the computer for 23 hours and only sleep for one, but rather, in recent years, I've also been trying to turn things around and develop a routine from this perspective as well, not just with my other investments, so that it takes up as little time as possible. And for me, for example, this has developed in such a way that I sit here from the Frankfurt session right up until about lunchtime, because this also includes the London Open and the initial period of London, when I believe there is the greatest liquidity in the market. So that's when the price really moves.
Guarda.
And during these 3, 4, or at most 5 hours, I usually deal with the stock market or related matters. And yes, all in all, this is also a source of income. So, I have never met a successful person in the stock market business who relies solely on this, because mental calmness is one of the essential elements of trading. And you need to be calm, and it shouldn't matter what the outcome will be when you open that position. And when I say it shouldn't matter, there's a great deal of calculation and years of thought behind that. So it's not as if I'm just taking a wild guess. But even so, if it does hit the stop, it shouldn't knock you down mentally.
That's right. That's right. I completely agree with what you've said. And you also have to bear in mind that there are periods which, perhaps due to your private life or for any other reason, can be quite taxing. And then you should have the option to stop for even a month and not even look at the markets, simply because you're not in the right frame of mind for it at that time.
You're not mentally rested because of things beyond your control. I've seen it countless times. For example, when something happened within the family, some negative or unfortunate event, and yet the person still sat down to trade, and it was immediately reflected in their results.
Yes, yes, exactly. And so don't let it become an obligation that you have to make money. So, going back to what you said earlier, because honestly, if you're not in the right mental state, if you're not rested or focused enough to trade, then simply don't sit down to do it.
Yes, then,
There should be the option to ignore it, even for months at a time. So,
exactly.
there can be periods in your life when you simply can't focus on this.
And not to mention, during the year, since this is a demanding calculation day in, day out, if you're doing this, you should have time to go on holiday, have time to go skiing in the winter, have time to go on a summer holiday, or to go somewhere warm in the winter and somewhere cool in the summer.
Yes, yes, that's good.
By the way, as a result of talking this through, what's your daily routine?
My routine usually looks like this. In the morning, around 7 or so, I take my dog for a walk and I combine this with a workout. This takes about 1 or 2 hours in the morning. By 9 or 9:30, depending on when I get back, I check what emails have come in regarding teaching, who has questions, or if there are any marketing issues to sort out or write about. Preparing an article or a video, for example. I have a look through these. That's how the morning passes. Then I have lunch, and afterwards, in the afternoon, oh, and I usually combine this with Forex trading as well. So in the morning, when I get back from training, I check to see if there's any opportunity developing, something promising on Forex. And if there is, I set an alert for it. From then on, I don't really look at it. Only when the alert goes off to say that the situation has arisen, then I check it, open the trade, and it just runs alongside my day. These days, I usually go for longer trades, so I trade on the 4 hour chart.
Yes, that's exactly what I wanted to say. That the listeners might not know, or maybe they do, but let's highlight that you're more into longer term trades, not necessarily intraday trading.
Yes.
I suppose hourly and above? More like 4 hour.
Well, by now, it's almost always 4 hour. So this has changed over the course of my life. I used to be a really hardcore day trader as well. Now, time is much more important to me than perhaps making money faster with shorter time frame trades. My time is more valuable to me now. So these trades are running, but it's enough to check them 2 or 3 times a day since a new candle appears every 4 hours. Well, I don't have to rush anywhere.
Yes.
And of course, there's the option for alerts as well. So these are running throughout the day. Sometimes I record them at certain intervals in a video explaining where the price is at the moment and that I'm adjusting the stop now for this reason. And then I post these in the Facebook group in an educational manner so that others can learn from them as well. So this is part of how I keep myself occupied. Other than that, I don't really have any other major commitments during the day. The afternoons are generally mostly devoted to the family.
The word freedom comes up again, doesn't it?
Yes, yes. For me, this is the top priority. And that's why I'm moving towards techniques that require less and less of my time. Although I know this usually comes with a lower yield since a process takes longer to complete than on a 5-minute chart where the trade is over in 3 hours and you still get your percentage just the same as,
Assuming you did everything right, of course, or you hit your daily loss in 3 hours, or even in 3 minutes, right?
of course.
Everything's just a bit quicker.
Exactly, exactly. So basically, fundamentally, you're not really doing anything very different there either. It's just that a cycle ends more quickly, and that's why people make more money. And you have to decide right from the start. Here, even on the first day of the masterclass, I'll tell people to start thinking slowly about what's important to them. So that
Yes.
then out of the techniques you've learned, which one you'll specialize in. Whether it's the one that brings in the most money, in which case you'll be drawn towards the quicker techniques, or greater freedom, which will actually come along the slower techniques. So while we're learning the basics, you should already be turning over in your mind what will be important for you later on. Or perhaps you don't even know yet. It might only become clear later on, but at least keep the thought in your mind that there isn't just one way to do this. There are many different approaches you can take.
The other thing is that you're already planting the seeds in their mind that even if they don't have a plan yet, they shouldn't just be thinking 2 or 3 weeks ahead, but should set themselves a goal for years ahead, or at least have some plans in place. Because for many people, even answering the question I often ask, all right, you're sitting here doing this, but what's your plan with this whole stock market thing, is a challenge. Because saying you want to get rich from it is, well, it's a very half hearted answer. That's not a plan. What is your plan? And many people already get stuck at this point, even in how to phrase it. So what you ask of them in these situations is, for example, completely justified.
Yes, and we haven't really talked about this here. Forex has come to the fore, but basically, my biggest favorite is stock trading. And in fact, I move most of my capital in this area. Forex trading is done with a smaller portion of my capital, and the main goal is more about holding in this form. And of course, people really like to see this in the groups. That's also why I make these videos. But if I look at myself, I'd rather describe myself as a stock trader, or perhaps that's my greatest passion. And these positions I have are long term, or rather medium to long term. I usually hold a position for a few months. So,
And now we're moving into even slower waters. That's probably why you said the community prefers Forex, because everything's faster there. Which, by the way, comes down to a very simple psychological case again. Everyone wants to get rich now, today, immediately, and people don't plan for the long term.
that's right. So beginner traders are impatient and very,
Yes.
they want results quickly. And really, they just want to experience the thrill itself. And that's why the Forex market, the currency market, is so popular because on the lower time frames, things really do happen and fast.
Yes.
But beginners aren't prepared for this. After all, this isn't a game. The currency market is, well, it's very serious. You need a solid background for it. And this is why I link it to the fact that in the masterclass, the trader masterclass, I teach stock trading first because beginners can achieve a sense of success much sooner with this. After all, if you look at it in the long term, if someone opens a long position, they already have a much better chance of winning in the stock market than in the other direction.
Yes.
Of course, I've simplified the matter a bit, but it's much easier. Things happen more slowly, they're more predictable, trends last longer. So, for a beginner, it's a much better environment to learn and to get to know the experience of trading. And of course, they have a much better chance of starting out with a sense of achievement than on the currency market. So, there on the currency market, it's almost guaranteed that you'll get your lessons very quickly.
A bitter pill, so to speak.
Yes, whereas on the stock market, even luck can give you a bit of a helping hand. Somehow the market will carry them along, even if they didn't open their position in the right place, even if their concept wasn't quite right, but the general mood will still carry that share along, the one they picked. So this is the initial advantage of, say, trading shares, that you don't get hit with the blows quite so quickly. On the other hand, in the long run, I think most traders will eventually return to trading shares, and I'd include ETFs here as well, because that's what will give them free time once they reach an age where time
When they settle down.
significant. Exactly, when they settle down, they've got it out of their system, and then it'll be about making money, but with minimal time investment. That's when the significance returns to share trading. So I tell my students as well, always keep shares in mind, keep practicing and monitoring them, because at some point you'll end up coming back to it anyway. In the long run, I think people come back to this. So I just can't imagine someone at 80 wanting to make money by scalping and sitting for hours. That's not
Was.
realistic.
Yes, yes, yes. Well, now,
In reality, trading isn't the purpose of our lives, but rather through trading, we can achieve the quality of life we'd like. But I don't think my goal is to sit in front of a monitor for my whole life.
yes, there was. There was a survey like that already. Already. Phew, I can't even remember where I saw it or where I heard it. Essentially, the point was that if we took the money out of the stock market, so if there were no financial rewards, no tangible rewards, then we'd actually lose more than 70% of the people who trade on the stock market. That was one of them. And this led to the next study. However, there would be 70% more people who were successful on the stock market. Now, listen to this. And they only removed the concept of money from it. Everything else remained the same.
All right, lovely, lovely, lovely.
Lovely, isn't it?
Yes.
So if you approach it in such a way that the little floating dollar sign isn't there, then perhaps that certain sense of freedom and feeling of being more liberated will come about sooner.
Yes, I suddenly examined myself like that while you were saying this. For me, the analysis itself brings me joy, and I experience this joy most of all when analyzing shares. So I find certain situations so beautiful. It's such a joy that I can press the button here or that I can look ahead. Then again, it's not certain that what I've come up with will necessarily work, but but it's connected to a joyful feeling, something I enjoy doing. So even if now I'm not saying without money because there does need to be some result, but
The motivating part.
that, for example, instead of playing Tetris for an hour, it's much more enjoyable to look for a good entry point.
Yes. Now, we've already gone well past that certain 1 hour I mentioned at the beginning, so let's slowly wrap up that certain basket. And at times like this, I sometimes like to ask a question, a funny one, because the answers tend to be very surprising and odd. Why shouldn't you get into trading?
Oh, good question.
Why shouldn't one get into trading? Because we've heard it a million and one times from everywhere, and adverts have put it right in front of us why we should get into it. But why shouldn't we?
Yes, am I giving this advice to myself or to someone else?
Both, in general, but back it up with your experience.
All right, why not? Why shouldn't you? Well, it is quite possible that you really shouldn't get into trading, as you will likely be a completely different person in 10 years' time. And if you can't accept that, you won't keep this identity of yours, this character you have now, then don't start because you'll be a different person in 10 years' time.
It changes us, yes. All right, thank you very much, Caroly, for coming to see us. Thank you very much for your words. I really enjoyed the conversation. I'm very glad to have met you. Do you perhaps have any closing remarks you'd like to share with others?
Thank you very much for the opportunity as well. And my message is that it's worth starting out in this profession. You have to take into account that this isn't something that will happen in a year or two, but after 5 years, you'll truly receive what you put in day after day with practice, the time you invest, and the emotions you experience here. But it's definitely a great adventure.
A great adventure planned for the long term.
That's right.
All right. Bye. Thank you very much once again.
Thank you as well. Goodbye, everyone. Bye.